I'm Owen Bigland. This is the Inside Edge video blog. Okay, happy Saturday. Let's do one of my favorite type of blogs. Let's talk about a motivation blog, the proper mindset you need for success, especially in this day and age. Lots of stuff going on, lots of dark clouds, election coming up, COVID, the new strains, the Delta variant. Are we, stock market, as I do this video now, is at 52-week highs. We are due for a pullback here, folks. It's been I think it's been exactly a year now without even a 5% pullback in the S&P 500. So we are overdue here. It doesn't mean I'm selling my stocks. I'm not selling anything. But I've always got dry powder. I've maybe let my dry powder, a little bit of cash build up a little bit here because I am expecting, to have a 5% correction here in the stock market. If it doesn't, I'll consistently still buy, and I'm not selling anything. But we're due, just like in the housing market. The Vancouver market, still limited inventory. It'll be interesting to see what happens this fall. Not a lot being listed right now. We should get more, as we head into September. We'll see if the activity picks up then. If it doesn't, and listings continue to rise, then we could see some downward pressure on real estate prices. But we'll see. I'll report it as we go. But I want to brushed on this many times about the biggest mistake I see so many people on in my day-to-day activities of a realtor and calling, talking with people. And I'll get people that will call me or email me or direct message me on Twitter. So many people live in a continuous state of fear. They are frozen endlessly on the sidelines. I'll get people that will call me and say, oh, and I'm thinking about buying a condo, my first condo, or an investment unit, but I'm afraid, the market's high right now. I'm worried about COVID. I think the interest rates are eventually going to go up, and when they do, a lot of people aren't going to be able to make the payments on their homes, and they're going to foreclose, and it's going to crash the prices. I tell them the same thing that I've been saying on this blog for 10 years. There is always another boogeyman, another dark cloud around the corner. It will never end, ever. I've been in this business 35 years in real estate as well as a individual investor in the stock markets. And I have never known a time ever in my 35 years as an investor that there wasn't something around the corner that was going to cause a crash. A major market correction. Don't buy now, just hold off. This is gonna, just wait another month, wait another 2 months. You have to stop living in fear like that. You have to make the jump. Markets will go up and they will go down. We are going to get a market correction both in Vancouver real estate as well as in the stock market. But trying to time these corrections is a mug's game. It will not work for you. As I'm going to tell you with people that are a lot smarter than I am, are telling you not to do that either, trying to time a market. If you want the superior returns, long-term superior returns in real estate and in investing in the stock markets, you have to commit that capital long-term. My golden rule, as you guys know, for real estate is 8 to 10 year minimum. That will solve all your problems. Same thing in the stock market. When I buy a company like an Apple or a Johnson & Johnson or a Home Depot or a Canadian bank, I could care less what the price does 2 weeks from now or a month from now or a year from now. I'm buying these quality companies, quality assets. I'm going to hold them for long periods of time. And I know that I am going to get some bad years along there. It's par for the course. You have to get through to you. There is no buying a company or buying a house and it never goes down. It goes up in a straight line. Sometimes that happens. I often talk about all the real estate I bought over the last 35 years. And I've used this as an example over and over again. Half the homes I've bought have gone up and never gone below water, below what I paid for it. Those are great. The other half, though, at one point, usually in the first few years, has been worth less than what I paid for it. But it was of no concern to me. I was either living in it as a principal residence, enjoying the home, or I had a tenant in there sending me a fat rent check every month on it. These are long-term commitments. I've taken advantage of the leverage. Go and watch my blogs on leverage, the low interest rates, and the tax-favorable status that these assets provide me. You have to go in with a long-term mindset. It's the only way to go. The media, though, of course, I harp on the media endlessly. God, the stuff I see in the media, I cringe at it. And every time I see some of these stories, I think, God, there's another 100 people that are going to read this and be permanently frozen on the sidelines in fear. Because that's what they do. They sell you fear. That's how they get clicks. You've got to take control and look at the landscape and how to guarantee good returns. And if you keep it, buy the right assets, don't just buy anything. I'm not talking about buying Bitcoin, although that's done well, or GameStop, or AMC. Those are not investable companies, those two. Buy high quality names, high quality real estate, hang on to it, and you're going to do fantastic. And besides, the friction costs, especially when it comes to real estate, and I've talked about many times, are extremely high. Real estate is not an asset you get in and out of in short order. The friction costs, the PTT, the real estate commissions, maybe GST, capital gain, are going to eat away at those returns. But the media doesn't tell you that stuff. Really good interview that I saw the other day in Bloomberg magazine with John Paulson, billionaire investor John Paulson. So if you're not familiar with him, look him up. Paulson, very smart guy. He was the guy, he was really the main winner in the subprime shorting the housing market in the US back in 2008. They always talk about that Michael Burry guy from The Big Short. Listen, he did well on it too, but he was small potatoes compared to Paulson. Paulson made over $20 billion in that trade on the shorting the housing market at that time. But very successful guy. I like him because he's down to earth. He's meat and potatoes. He's like Warren Buffett in a lot of ways. So they had a really good interview with him, asked about, talked about SPACs and also Bitcoin. I know some of you guys aren't going to like this. He's not a fan of Bitcoin. As a matter of fact, in the interview, he thinks Bitcoin eventually will be worthless. I don't know about that. I don't know enough about Bitcoin. I know I've got a lot of you guys that are invested in it, and I wish you the best with it. It's not something that I'm interested in. I'm at a stage in my life where I'm only investing in companies that are, I can assess. They have balance sheets and income statements, and I can analyze them. AMC and GameStop don't meet those requirements either for me. I wish people all the best. I love to see people making money, and hopefully you can make some money on those, but be careful. They're just not investable companies for me. I like the meat and potato stuff that I can analyze, the Johnson & Johnsons and the Home Depots and the Visas and the Canadian banks and all that stuff. Asked Paulson about the biggest mistakes investors make, and that was trying to get rich quick. So buying the GameStop and buying the AMCs, trying to get a quick trade. For some people that will work, for most people it won't. You're going to get your head handed to you and lose all your money. So be careful with that, but it's the get rich quick stuff. Investing, he said, is a slow, methodical process, and it is. It's not a get rich quick. You're not going to see much in the early years. You buy your first home, you slowly start building up some equity in it. You buy your first stock or your first ETF. You're not going to notice much in the first 5 or 10 years. Trust me on this, when you get to my age, or even when you get into your mid-40s, as I talk about in my book, when I hit my crossover point, where my passive income was enough to retire and live on if I so choose, then it'll all make sense to you. The eighth wonder of the world, compounding, will take you there, but it's a slow, methodical process. The best question they asked, if somebody came to him and asked, how should they invest $100,000, what would you tell them? Well, John Paulson, again, he's a meat and potatoes guy. He said, buy your principal residence, buy your home. Hey, this guy, I love him. That's the same advice I would give a young person as well. If you've got $100K, what should you do with it? Should I buy GameStop? Should I buy Bitcoin? Buy your principal residence. Get out of that rental treadmill. He talked about, you're using the leverage. That's the biggest wealth accumulator you can use. Use it wisely. So many people misunderstand leverage. Go back and watch my blogs on it. You're locking in the States, you can lock in a 25-year fixed term, at 2.7, 3%. Huge financial hurdle in life buying your principal residence. You're going to build up equity. As he said in the interview, you can tap into that equity down the road at very low interest rates to maybe buy an investment property or renovate the home, or even take some money out and invest it in the stock market down the road. So it was a good interview. It was in the Bloomberg last week. Yeah, check it out. Last couple things, I've used this analogy before too. The living in fear, and you've got to make the leap. I always, if you've read my book, you know how I look at my portfolio, not so much in the companies I hold, but what kind of income those stocks produce for me. So I look at my real estate or my stock portfolio like a 30-unit apartment building. In apartment 102, I have Apple. In apartment 303, I've got Johnson & Johnson. In apartment 404, I've got Pepsi's. I've got Royal Bank. These companies pay me a quarterly dividend. And the nice thing with pretty much all the companies I own, not only do they pay me a dividend, but they increase that dividend every year, like clockwork. In some cases, double-digit dividend growth. So I always use this example. If you were to buy $10,000 worth of Bell Canada today, it's currently yielding about 5.5%. $10,000 in Bell Canada is going to give you $550,000 every year in the form of a dividend. And even better, next year that dividend will probably go up to $570 or $575. Bell Canada has been continuing to raise that dividend. So once you bought that $10,000 worth of Bell Canada, sure, if you want, you can look at the ups and downs of the Bell Canada shares every day that trade 5 days a week on the TSX. But if you want to learn how to stay the course a little bit better, tune a lot of that stuff out. Instead, focus on what Bell Canada is going to do for you annually in the form of dividend income or rent income they're going to pay you. I look at it this way. You buy $10,000 in Bell Canada, it's going to give you $550 this year in dividends. If you, let's say you're retired, you can live off of, if your house is paid off, I could live off $250 or $300 a day. That'll cover my food, my entertainment, my car expenses, whatever else. So I look at it this way. If you buy $10,000 in Bell Canada, you have just secured yourself 2 days of financial security for life. For life. Now you've only got 363 more days to go. That's the way I looked at it in my early years, starting back 20 years ago. For every $5,000 of stock I would buy, what does that can produce for me? I can knock off another day of freedom. You keep doing that until you've knocked off 365 days. Now you're living large. Now, if you so choose, you can quit your job, tell your boss to go shove it, and live off your dividend income. You can do the same thing, of course, with your rental properties. If you buy a rental property down the road and it's generating, let's say, $1,000 after expenses in cash, then you've maybe knocked off another 4 days a year in financial freedom. So look at it that way. It'll help you stay the course, as opposed to just looking at the day-to-day ups and downs of these companies. I mean, you don't do that with real estate. You shouldn't. Honestly, I couldn't tell you exactly what many of my properties are worth. I don't really pay much attention to it, to be honest, and neither should you. If you can, if you want to. But it's the same thing with your retirement and your stock portfolio. Buy the companies, buy good companies, sit on your hands. Over time, they're going to do very well for you, and look at what those are producing as far as dividend income. For every $200 you're taking in, I would call that 1 day of financial freedom. For a lot of people, $100 a day is 1 day of financial freedom. So if you bought $10,000 worth of Bell Canada, you've just bought yourself 5 or 6 days every day, 5 or 6 days for life, just off that $10,000 initial investment. And I can tell you, Bell Canada will have some ups and downs, but over long periods of time, 10, 15, 20 years, you're going to get some nice capital gain or appreciation on those Bell Canada shares, guaranteed. So look at it that way, and it'll help you stay the course. But stop living in fear. And so much of that I just put on the media. There's always another boogeyman around the corner, something else that's going to trip you up, stiff arm you into the ditch, whatever. You got to make the leap and look at things with a long-term perspective. Every time I buy a share of a company, I know that there's a good chance that at this time next year, I could be down 10% on it. But it's par for the course for the long-term gains. And if it bothers you, the ups and downs, then just don't look at your portfolio. This is Jack Bogle's advice. Stop looking at your portfolio. Just systematically buy good companies that are paying you to hold them, and then revisit your portfolio every year or every couple of years and look at the balance. Pretty straightforward. I'm Owen Bigland. As always, thanks to my new subscribers. I'll see you next week.